This was the second most short the banks had ever been in the silver market, aside from July of 2016. And then they topped that at least once, possibly twice later in 2024, before setting a new second place entrant here, which was actually right before the price got clobbered on the reciprocal tariff announcements that really never indicated any sort of tariff against England, where the gold and silver came from, or that they would not ultimately be excluded. In news that at that point had already largely been priced in, yet despite silver being over 35 bucks at the time of the release of that reciprocal tariff announcement, and when the banks have been short enough to lead former JP Morgan Precious Metals Managing Director Robert Gottlieb to say that, according to the COT, the short positions are huge, someone may be exposed. And anyway, that's when you saw a lot of short covering.
In Paul Volcker's final book, he said he never accepted from either a moral point of view or an economic point of view. He said even low inflation, it's still skimming. He said in the book, my mother would see through that.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on back from Memorial Day holiday weekend. Hope you had a great time out there and got a nice chance to take a break and appreciate that, even though there may be some things in the US or whichever country you may be watching from today that might not be so ideal on a governmental level. Still appreciate all of the people who have dedicated their lives to best efforts to giving a country where we can be safe and free for the most part. Hey, everything's not perfect, but certainly a good, nice day to remember some of the sacrifices that have been made. And then kick back into the gold and silver action, which you can see on Tuesday here. We have the gold futures down $73. So a tough start to the week there.
And the stuff is also quite heavy, as you know.
Now, you do have a little bit of that decline due to the adjustment because you did have the contract rolled over, but just as comparison, you can see here in the Kitco spot gold chart, down $48. So in either case, gold is down a fair amount today, and silver not up, but also not getting clobbered, down 37 cents at 33.23. And we will dig into an update on the short positioning and also some of the inventories, which obviously have changed quite a bit in the past few months. Now, to begin, though, in terms of what is driving this, the main headline here we see Trump hails positive step in the US EU trade talks as markets hope for a deal. I remain excited about the resolution of the trade deal with India, where at least Hindustan Times reporting that part of the trade imbalance might just be settled by sending gold and silver, which, if that does occur, I think would officially count as a drain on the metals if same time as as we will get to in a moment, rather, we'll see how gold has started leaving the COMEX after flowing in there. And of course, everyone, not daily, but every once in a while, the market has moved a bit. I go up here on CNBC and you can click these different tabs, at least get an idea of what they are saying, which kind of as you would expect, gold falls as firmer dollar adds pressure of softened US trade stance. So anyway, that is the pricing today and mainstream explanation. One note in terms of Europe, posted this in the Substack on Friday. This is the free one. So if you go to goldandsilverdaily.substack.com and click on this, you can read this one for free, and highlights basically a link to an interview with Martin Armstrong where he talks about his views on what is happening between Russia and Ukraine and the US and Europe, and amongst other things, if you've ever seen that documentary, The Magnitsky Act, and you're familiar with the legend of Bill Browder, then there's a Bill's name came up in this one. So if you understand the context, you'll find that rather intriguing how Bill was involved. Although more importantly, he talks several times about how the Europeans want more, and also that they see it as not only their goal, but an achievable goal to break up of Russia. So, not ideal over there. But anyway, if you go over to the Friday Substack, you can see that there. And with that said, let us take a look at some of the changes. Here is the COT report for the silver market. This is the swap dealers, aka the banks. And here, this line, you can see the farther below zero it gets, the more short the banks have gotten. Now, this was late in 2024, these two, where we saw basically this was the second most short the banks had ever been in the silver market, aside from July of 2016. And then they topped that at least once, possibly twice later in 2024, before setting a new second place entrant here, which was actually right before the price got clobbered on the reciprocal tariff announcements that really never indicated any sort of tariff against England, where the gold and silver came from, or that they would not ultimately be excluded. In news that at that point had already largely been priced in, yet despite silver being over 35 bucks at the time of the release of that reciprocal tariff announcement, and when the banks have been short enough to lead former JP Morgan Precious Metals Managing Director Robert Gottlieb to say that, according to the COT, the short positions are huge, someone may be exposed. And anyway, that's when you saw a lot of short covering, when you saw the price decline there. And since then, we saw quite a reduction down to about 30,000 contracts, has gotten bigger in past weeks, which is slightly different than what we see in the gold market, where here we did see records set last year and again this year for largest short position by the banks. That has since come in quite a bit, not by any means. Now, here you see a couple times in the past 10 years, banks did end up getting long gold. Now, in more recent times, it's been a while since they've been back to flat, although you can see, at least according based on the last two times before they reversed their positioning and started getting short again, that they still have perhaps another 50 or 100 million ounces. Now, whether we get back there in today's climate, we will see. But anyway, slightly different picture in gold than what you have in silver. In terms of some of the stockpiles, talked about this a little bit, but wanted to give you the chart today because here we see, let's get the dates there on the bottom, beginning of 2025, just under 20 million ounces, got up all the way to 45 million ounces. And then in the last 2 months now, we've seen metal start to come out. A lot of indications that it's feeding what I think it's, I try to always avoid, I hate that word, the gold or silver pumper, whatever that actually means, because that's the opposite of anything I've ever intended here. But I mean, some has come out, and I think it's fair to call what we've seen in China some form of gold mania. And then additionally, if the US is going to settle that trade deal with India by sending more gold and silver, wouldn't call it a drain on the gold yet, but the table is being set. You'll see if the meal is served and everyone attends dinner. But anyway, you can see some metal has come out of the gold vaults. Different picture in silver, where it stayed pretty much flat. Here you can see went from about 300 million ounces up to 500 million ounces in a rather short period of time. And if we go here, it looks like slight decline there, but so far the metal staying in the COMEX. Let us take a look at the registered category, which is always fun. Now, here were the days back in 2023 when the price was getting clobbered, yet we're wondering, gee, that's under that 30 million ounce mark and certainly was low. As I try to point out on some of these things, there's still time on the clock. And I mean, you obviously back in 2020, there you this was 2021 during Silver Squeeze when you had metal added, and gold, a lot came in 2020 during the EFP crisis. But you can see that there are things that change. And as of now, certainly on the higher end, Now, that has left the London market a bit exposed because, as you probably are familiar, this had started back in 2021. There was a lot of silver leaving, over 1.1 billion ounces, and then got down to that 800-ish, 850 level for a couple of years. Then, when the tariff fiasco began this year, I seems to me a bit of a fiasco. I guess there's different views. Maybe some think the whole thing was a success, but either case, you did see silver start to come out again. And as I've been almost finished writing in a silver report that I've been putting together, went through some comment, one of Daniel Galli's reports where he had mentioned back in January that with the metal that had already come out, if you look at the free float, which basically you have 800 and change million ounces in here, but a lot of that's already allocated to the ETFs, basically was only 50 million ounces away from the average turnover in the London market on a daily basis. And that was when we had about 850 million ounces, and we got down to 711, and now a little has gone back in there at 734. So, said we're 50 million ounces away from free float not being able to cover the daily turnover, and now we're 100 million ounces lower. So, if you did have another issue in London, well, we'll see if some of this gets shipped right on back. Has not started happening yet, but anyway, some of the things to keep it that, well, you can keep an eye on it, or I'll be here with you doing it as well. So look over at what is happening in Shanghai, where we see again that everything peaked in 2021. They're over 7,500 tons. And now that has come down, really dropped in 2024, has gone back up a little bit, but a third of that is remaining. So Shanghai inventories on the lower side. It actually reminds me of another thing that is touched on in that silver report about how when there was that $3 premium in Shanghai, there were Chinese smelters doing deals directly with Latin American miners just because they wanted to get the metal. So anyway, I'll keep you posted on that. Few last notes before we wrap up. Walmart tariff price hikes are likely weeks away, and I've had this one pulled up since at least last week, and which is, I suppose, irrelevant. More importantly, it was posted on May 15th, and retail giant is likely to start rolling out tariff-related price hikes towards the tail end of this month, and I certainly expect more in June, said their CFO, John David Rainey. So just following on of what we've talked about and written about of the tariffs having an inflationary impact. And also, while he did not go this far, I've said before that we were on track to have supply chain disruptions this summer, especially the longer the tariff non-resolution, despite that somewhat truce that took place. But the longer that goes on, the higher the probabilities. And I've not seen anything to change my own view. I can't say that's 100%, but from the stuff I've read and heard, that many of which we've documented here, still seems to be on track. So, fortunately, for some good news in wrapping up, would like to thank our dear friends at Fortuna Mining. Been great getting to follow their progress for many years, especially since back when they did that Rock School deal in 2021. There were many critics of them getting involved in West Africa, although fortunately that has turned out quite well because they got their Seguela project and the mine up on time and on budget. And then they also did a deal for Chesser Resources, which is in Senegal and has the Diamba Sud gold project, and is one of the things they're looking towards as they recently divested their Yaramoko and San Jose mines. And while I know they're always out there looking for opportunities, fortunately, they already did their deal and have been moving that project forward. And on top of it, they got some handsome drill results here, getting 8.6 grams per ton over 13.6 meters at the Southern Arc prospect at that Diamba Sud project. Here, a note from Paul Whedon that got the pleasure of meeting when I was in the Seguela mine visit. And he mentions our exploration work at Diamba Sud continues to yield strong results, particularly from areas with limited historical drilling. Notably, recent drilling at the Southern Arc Prospect has delivered some of our most compelling intercepts to date, highlighted by 8.6 grams per ton over an estimated true width of 13.6 meters and 9.3 grams per ton over 11 meters. And certainly always good to hear when they mention these results further reinforce the project's potential for near-term resource growth. So not saying hopefully we find something one day, but looks like things are progressing in a positive manner here. He also mentions infill drilling at Area A, Area D, and Karakara have also returned highly encouraging results, including a standout intercept of 113.7 grams per ton gold over 6.4 meters. And I have left the link to this press release in the description field below so you can take a full, careful, and thorough look through the drill results, especially if you'd like to find out more information on what Fortuna is doing. Following on what was a record free cash flow, something that's happened several of the past few quarters and was the case after the first quarter. Fortunately, Jorge Ganoza, the CEO of Fortuna Mining, joined us live on the show and for a great update of a company that, especially with where the gold price is doing well now and has the potential to continue capturing that. Well, that call is coming your way now.